Blackstone CEO and chairman. That's, of course, Steve Schwarzman. Steve, thank you so much taking time out of your world tour to talk with us here in Paris. Look, we are here in Paris. We're here in Europe the week after an ECB hiked rates, confronted with sticky inflation, weaker growth. The risk is constantly changing. How do you think about risk in this European region?
Well, I think Europe is slowing down. It's pretty clear that there's certain countries, for example, Germany, where I was yesterday, where growth is slightly negative. I'm in France today. We've got an expansion of our office here. And France is doing the best of the European countries, and I think has been the biggest beneficiary of Brexit. I think the government's done a great job making France attractive, Paris attractive. But as the central bank continues to raise interest rates, no one ever knows where these things stop. It's certainly suppressing growth. So I think it's a reasonable expectation for Europe over the next year to have pretty muted performance.
Does the ECB need to stop soon for fear of it not just being muted, but a full-on recession?
Well, that's up to Christine, not to me. I think the inflation's still pretty high here. It's in the fives, and you can't stay at that level. And so the central bank typically would do what it needs to do to lower that.
Steve, ever the diplomat. One source of support for Europe, though, that we don't have, that we thought we would have at the start of the year is China. We came into the year thinking China would be this huge source of global growth. Now we're just hoping for more large-scale stimulus. Have your assumptions about China changed this year?
Well, I think they did change. I was in China in April, and my expectation was that there would be a pretty rapid bounce back. But what I found was that people really had a tough time over the last 3.5 years. They had a real estate crisis for a while, and that became more pronounced as they actually had to meet maturities. And the Chinese people tend to put 80 to 90% of their savings into real estate. So when real estate goes down, it really takes away confidence, because nobody likes spending a lot of money as their net worth is going down. It's just not how humans work, whether they're Chinese or any other place. And so it's difficult for China now, in the face of that, to have the kind of rapid growth rates that we're having. And Europe has been a big exporter to China. China has provided, over the last 10 years or so, before COVID, probably half of the world's growth.
So what does the opportunity set look like for Blackstone in China then? Is there still opportunity, or do you need to wait?
I think most people, including the Chinese, are taking a wait-and-see type of approach. One of the things with China is they often make mistakes, but they typically don't continue making them. And they don't have a lot of pride in wrong decisions, and they're practical. And so it's, in a way, a matter of time before they make the appropriate adjustments and start growing again. But in the short term, I think it's going to be somewhat difficult.
Steve, if I can take you back around 4 decades, when you founded Blackstone, just $400,000 in pocket and capital, to now $1 trillion. How do you get to the next $1 trillion?
Well, we just keep doing what we're doing. I didn't realize that $1 trillion was an ending point of some.
It certainly sounds nice.
Yeah, well, it's nice when you start with nothing. We've got a market cap now of $140 billion. We're the 5th largest financial company in the United States after JP Morgan and Bank of America and Wells Fargo, and we're not a bank. And the 4th one's Morgan Stanley. We're $7 billion short of Morgan Stanley at the moment. So hopefully at some point, we'll be the 4th largest and the only non-bank to do that. you know, I don't manage anything to a number. We're in the business of creating great products for institutions and individuals so that they can perform better than all other alternatives with safety. That's what we do.
Well, with that number, you definitely get more attention, though, and perhaps even more scrutiny. Jamie Dimon, for example, specifically called out Blackstone, talked about your industry altogether, but Blackstone saying you'd be dancing in the street about new banking regulation, that you would step in and do more lending, more private credit. Is he right? Were you dancing in the street after more banking regulation, Steve?
I like going dancing regularly, but not in streets. We're just doing what we have been doing for a while, and it's been very safe for our customers, very good performance with all of our debt products. As we look to the future, credit has been the most rapidly growing part of our business for the last 3 years. And to some degree, that's helped by central banks increasing the rates. So credit is now very competitive with other equity type of products, and it has the virtue of being much safer than some of the equity products. But these things actually are cyclical, and when interest rates go down, real estate is really going to pop in terms of value and growth, and it'll also positively affect private equity. So for those of us who've been through at least 6 cycles, you look at all of this with a little bit of balance, and I think we're going to have a lot of opportunities for the firm to be growing.
To that point, I mean, you have a lot of men and women investing right now who have never lived with 5.5%. You've lived with it. You lived through higher rates. What do they need to understand about investing right now in a higher rate regime?
Well, I think you start thinking about alternatives in the sense, and I mean alternatives within different things that you can do. That you can invest in certain credit products and get a 10, 11, 12% return with very high levels of safety. You learn that when interest rates go up, certain things you thought were wonderful become unappealing. Some of the super high-tech companies where people were buying them at multiples of revenue. I always know that that's a bad moment when somebody tells you you can buy something at 10 times revenues, and the market's trading at 15, so you got a bargain. The fact is, it won't hold that value when interest rates go up. So you have to learn what fundamental value is. I know that sounds old-fashioned, but the people who don't do it really suffer. A lot of the venture stuff is down 50%. I think some of it's down a lot further. And so you learn to be in touch with more of what's safe with growth as opposed to just anything works. For some period of time, everything did work.
Are we still overvalued, though, in those pockets that you're concerned about? Or has the valuations coming down in the venture space, has that normalized now? Are you still concerned we're still askew with fundamentals?
Well, I think we're probably still a little optimistic. You have to get through a cycle to see where things will really be worth. A lot of the venture business, where I'm not an expert, but it struck me that ever-increasing markups with no cash flow, ultimately, every time I've seen it, that stuff really goes down. And we're in that cycle.
How steep of a downturn are you expecting in this cycle in terms of a recession? Are you expecting one? Are you preparing for one?
I think we're going to do pretty well this time. We have very low unemployment in the United States. And that kind of environment is tough to have a serious recession.
What about a fiscal accident causing something?
Well, you can always have a trigger that really affects markets, which will affect an economy. We're running huge deficits, and we have more fiscal problems than we do normal business cycle problems.
Steve, you're asked very frequently about who you're supporting for the GOP, and I don't want to ask you that because I know you frequently say I'm looking towards the next generation. I want to ask about the next generation. Do you see that? Rising stars? Are you optimistic that there are those there who can carry the mantle?
I've learned there's always people who appear who you had no expectation. So when Barack Obama was elected as senator, it wasn't even within a year where he started running for president, and he became president soon thereafter. There are other people who will come and do that. American politics, I've found, at the presidential level, is pretty volatile. The people you think are going to win, whether it was Hillary in 2016, and they didn't win. Other people who were no place, they end up winning. In 2015, about where we are now for a presidential election for the Republicans, you had the governor of Wisconsin in first place. You had Jeb Bush in second place. You had Rudy Giuliani in third place. And by the time there were 2 or 3 primaries, they were all gone. And somebody named Donald Trump won, who wasn't even in the game. And so I think all the straight line predictions of what's going to happen, I sort of just sit back and say, I've seen a lot of volatility in my life of what the public wants. Apparently the public is not that interested in really older people.
Right.
I think there was a survey that said 77% of the people didn't want Biden to run again. And so when you have that kind of situation, usually something else happens.
Right. Well, Steve, I hate to put it in this light, but you're only a few years younger than the current president and the former president. How are you thinking about your legacy right now?
Geez, I don't think about legacy. I may be a little delusional. I still think I'm younger than apparently you do. So as long as I have really high levels of energy, and I'm fortunate enough to have a simply amazing person, John Gray, who's president of the firm, who does stuff that I used to be doing. I love what I do. It's fascinating. It's global. We're learning all kinds of things every day. Plus, I have a very interesting philanthropic life, and also involved in the political world. So for me, those 3 things certainly beat retirement. Well, what would I do?
Yeah.
This is so stimulating. Yeah. Plus, I get a chance to meet you. I'm here in Paris. I have a certain enthusiasm, if you will.
Steve, I may be a millennial, but I know age is just a number. Don't worry. Thank you so much. Unfortunately, we're out of time. A pleasure to speak with you. Steve Schwarzman there.